The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. Tiger Technicians Hour, this 20th day of August. Wow, time's flying. Summer's just about gone. We've got a couple of weeks left here in the Boston area. Whew. What can I say? We've got the Dow down 200 at 17,148. S&P's down 22 at 2,057. You got the comp index down 78 at 49.40, down certainly below the 5,000 level. You've got, and this is going to be very interesting. Yesterday, a couple of days now, we've been talking about the internal strength of gold, that it seemed to be based on some of the stocks that were acting very well, but also because gold, besides, if you put the parallel relationship of the mirror image of the dollar rallying and gold holding quite well, then the dollar started to pull back. Now the dollar's pulling back a little bit sharper than it had been earlier in the week, and gold is up 21 at 1149.70. We, in fact, for my subscribers, we are long gold via one of the ETNs, and it's looking quite good. Now, it's not Technical Friday, but if you don't mind, I'm just going to take a moment here to show something. This is a technique that I've been developing over the last 2 years. I use it more and more, and I'm going to explain what it is, just because I know that so many of you now at least are using the notation of the Chapman wave, if not many of the other techniques, but at least the notation. If you go to the low bar of gold, the continuous contract that was made at 1072.80 on the 24th of July, you had a spike to the upside the very next day, and then that failed, and there was another little pop-up below it that made a little a peak, then a pullback, and a lower price, and then another pullback. So what I've done over the last few years, and I found it to be very successful, at least in giving me a heads up. The only way you could be wrong is to be a little early. But if you use money management and other technical factors, as well as the MACD and the stochastic, this is where it does become important. You don't even have to make a decision, because the decision is made for you. Technically, that should be the high of the 27th of July. In the Chapman wave, in the way the CDs articulated, and there's no problem here. This is probably what I would call a more refined way of doing it. Kind of gives you a heads up a little earlier. Then the breakout above 1,104.90, that was the high of the 27th. Excuse me. Sorry about that. And then the subsequent leg that started on the 10th, where the gold went to 1108.50, that's a floating letter. That letter should normally be B, and that B continues on the 11th, a higher high, the 12th, higher high, 13th, higher high, fractionally 1125.50 to 1126.30, and then that becomes a peak because the next day there's a lower high bar. Remember, I say a high bar meaning the whole bar, not just the close. So what I've done now with this technique is I use previous peaks below the initial peak as at least a heads up. So this is gray A, gray B. A break above that A minus says, well, I'm going to call it C. So in fact, I'm one letter ahead. We've got to D. I'm one letter ahead. Technically, it should be C. But at least it's saying to me, hey, use your 120-minute bar, which is in the screamingly high leg E, and a little bit overbought. Use that as a guidance. You don't have to get out of the position, but you might want to start looking at that as a slightly different letter, that it might be D rather than a C. If it's a D and it pulls back sharply, you're ready for it. If it's a C and you're still expecting another high afterwards, you're going to be kind of trapped on any sharp pullback. So all it's saying is it's a heads up. So I've begun to use the technique. I had begun at least 2 years ago. I've been refining it ever since. I've discussed it in my Master Trader series, and whenever I'm together with tigers who are using with the Chapman wave, I discuss it as a possibility. I even discuss it here on air. Why? Because the whole objective of the Chapman wave methodology is to try to get you in early and to get you out early rather than late. That's all. Timing is of the essence. Now let's go on. When I'm looking at the weekly chart, this is still leg A. And that to me is way more important than the daily, because the weekly now is suggesting moving above the 9-period moving average on a Thursday with a Friday to go for the end of the week, that it'd have to be a really sharp pullback to close under 1132, which is the 9-period moving average. So now let me move this away. Just briefly, I want to move it away to show you that the ugly bar of last month is having so far an inside month, and that higher low and a higher high thus far. 1176 is the 9-period moving average in the month. I suspect we might just break above it, and we're going to start to make some kind of an arch formation. And later on, we'll come back and do some testing. But in the meantime, everything so far is looking really quite good. If you heard Tom's analysis of the of gold and some of the gold stocks, his outlook is positive. I'm not sure on the time frames, but so far I think he's looking at it as a substantial break to the upside, and I have to concur. So now let's look at the TLT, because that's going to be very important. Why? Because it just broke to a new recovery high, and that's extending leg B. Doesn't matter where we close tomorrow. This is in fact a very strong leg B to the upside in the TLT. That's suggesting to me that the sell-off that we've got now in the market, especially since, as my subscribers know, we have been timing entry points on the short side in sectors that have been unbelievably strong. And we've been trying to get them to at least time the key stocks as shorts, thinking that if we get a feel for how they are starting to act and react by being in the position, it's much better than just looking at it. You can see how they participate intraday when you get these big spikes to the upside and then big tumbles to the downside. That says to me that what we're looking at here is a situation where lower lows and lower highs is now going to be the norm. We've only got a week to go before we include the monthly charts. And so far, the weekly charts are suggesting strongly that those monthly charts are going to give sell signals. And if a monthly sell signal comes in, you've got to expect at least 2 to 3 monthly pullbacks, at least 2 months of selling. So that could take us into, October, maybe November, I'm not sure. But we'll deal with these things one step at a time. And if you're looking at the yield, the Japanization of our bond yields, 12, 13 years, I've been talking about it. It's hard to believe that it could even exist. Look at this chart right here. This is the TYX. This is the 30-year Treasury bond interest rate, breaking down in a little arch formation so far. But it's really just stuck. I'm not interested in saying it's going to break to the upside, break to the downside. I'm just saying it is making lower highs and lower lows. And that pattern suggests that yields are really not the issue. And to put that together with something that is very important, let's just have a quick look at the HGX. That is the Philadelphia Housing Sector Index. Yep, peak F, I believe, with the Chapman Wave side and doji confirmation. It's at 247. This is the notation so far. I'll have to make a change if there's a break above 252.20, but it is a leg D in the weekly, it is a leg D in the monthly, and I've got it so far as a peak F, even though 92% in the stochastic, MACD is very strong. I did this based on the way that the 120-minute chart went to a peak E and has turned down very sharply. It's suggesting to me that 245, the 9-period moving average in the daily chart, will be taken out soon. I'm totally wrong if this suddenly pops by tomorrow to the 252, 254 area, not by tomorrow, let's just say by early next week. Instead of breaking under 245, it goes above 251. It suggests it's going to retest the high. So that's the way I'm looking at that. Let's go on. Dollar DXY. Look, there's the dollar pulling back. Whoa, pulling back. That's that arch formation. The fight between the cup and the arch has a right shoulder failure pattern. Dollar is coming down. Gold is going to be going higher. That's the way I'm looking at it right now. And let's just quickly do the HG, which is the copper, high-grade copper. Nice bounce, high-grade copper. Congratulations. But chart is still very, I'd say pathetic. I don't want to be rude. It's just really ugly. Just not a good-looking chart. However, the daily says little bounce here. Monthly says, the weekly says 2.43 is the resistance, and the daily is at 2.3195 right now. Yeah, nice bounce. And 120-minute chart suggests 2.34 is very strong resistance. Monthly chart, oh, maybe it's coming together with the commodities. Oh, let me look at the commodity index. How could I forget? TRCCI, there we are. TRCCI is attempting some kind of a rally. Ooh, commodities rally a little bit while the dollar takes a breather. I'll be watching this real closely. So for all this is another one of those little bounces, but I can tell you now, 398 up to, if the Reuters equal weight commodity index next week takes out, now it sounds like miles away, 406, goes above 405.51 to the 406s, we have a change in trend, not in the short term, meaning just weeks to days to 2 to maybe 3 weeks, but an intermediate term, which says we could have it going 3 to 6 weeks for a bounce. And that would be really interesting. Wow, first time in ages. Well, what is it, JJC or JCC, JJC? Let me check that out. No, yes, no, yes. JJC is the iPath Bloomberg Copper Trust ETN. Yeah, look, a little. I'm not going to call this an island reversal. Because it's overseas trading as well. It's already trading way before our 9:30 opening. It always has gaps, so forget that gap. It will be important. But there's a positive divergence between the stochastic and the MACD moving higher, and the price coming down to multi-year lows. Yes, very good. Hey, I think we've got a little bit of a change of trend here. We've got the commodities potentially rallying. Oh, I'm pleased I looked at that. Commodities potentially rallying as the stock market is really under pressure. Most importantly, let me just do this again. I do it all the time. I'll do it again. The IBB has 357.11 as a target in the downside. If it breaks that, this IBB is going much lower. That's the iShares Nasdaq Biotechnology ETF. And you can see that next cup formation forming right here, going to the doji candle. It's already there. I suspect that the 357.11 level will be taken out within days. And then all of a sudden, you're looking at this down channel in the weekly chart, the XLV, which has been on an absolute tear to the upside, pulling back at 74.85. I suspect that that's also making a turn to the downside. All we got left now, a couple of sectors, and we'll talk about that when we get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Basil Chapman. Dow's down 217. S&P's down 24. Ooh, wait a minute. Dow's down 1.26%, and the S&P's down 1.19%. So they're down once again. I think that's because Disney just getting smacked. And I spoke about Disney. It tells us a lot. It tells us a lot about Disney coming down. All right, let's go to our first caller. We got Ben in Tallahassee. Ben, how are you? Ben, listening on the computer, so it's a little...
there you are.
There
sorry,
you are.
Sorry
Hi.
about that, Basil.
No problem.
Hey, first of all, I just want to say fantastic calls on the market here recently.
Well, thank you very much. I do appreciate that coming from
outstanding.
you.
So here's my million-dollar question. I've got the VIX. I've actually got UVXY. And the question is, do you see a peak C right now in both the 120 and the daily?
So in the UVXY?
I'm sorry, leg C in both the just the VIX, the base.
Oh, in the VIX. Okay. So if you don't mind, I'm going to go to the VIX itself because that's the root. So let me just show you what I've done. You remember I was just explaining a moment ago, you might not have heard it, but I was explaining a chart where I used peaks that were after the first initial leg A, it pulled back, and underneath it there were lower peaks. But the price itself pulled back sharper, but did not take out that original low that started the buy signal. And therefore what I said was that over the years, I've learned to use all the peaks and all the troughs because it's really important, regardless of where the low comes in afterwards, as long as it doesn't take out the original. The reason why I'm giving this preamble, let me show you what I've got. The low of 11.71, and folks, the CBOE volatility index is a really important index and indicator that you can use. I use it, but as I always do with these things, it's probably my own, my own problem that I have that I don't retain for very long the original concept, because my mind is always working to say, hey, wait a minute, how does that fit into my own theories, etc.? All of a sudden I move on and I completely forgot what the original is. So let me explain what I do. Number one is the VIX index for me has only two purposes. If it's very low, and very low, I always, for my subscribers, I explain what very low is. I consider it to be buying pressure, and when it goes higher, I consider it to be selling pressure. Now, let me just explain. When it goes low, it is selling pressure on the VIX, but just like bonds, when bonds go up, yields come down. When bonds go down, yields go up. The mirror image, that's what we're talking about. So when the VIX starts to drop, invariably you will start to see the prices in the marketplace go higher, the indexes. And it could be, this is the New York Stock, it could be based on, today they make VIXs on stocks on all sorts of things. But let's just stick with what we want to do. At 11.71, the low of the 20th of July, you get a peak A on the 22nd at 12.83. Then it pulls back. The high next day is, oh, wait a minute. Whoa, wait a minute. Hey. Wait a minute, did I skip something here? Just as well I did this, because all of a sudden I've got something very different.
Are you doing the daily or the 120?
I'm doing the daily.
Oh.
I'm doing the daily right now. So that went to a single leg A up on the 27th. That is A. But because it pulled back and there were peaks underneath it, this becomes an A minus. And underneath it, the low of, the explanation is exactly the same. The low of 11.82 on the 31st of July makes a peak the next day on the 3rd at 13.55, still way underneath the 1627 high of the 27th. It pulls back, and here, this is where the whole preamble comes in. This is the whole explanation of what I'm trying to do here. The next low, after that first peak A, the second peak A, went below. It went to 1176. Normally, that would become an A minus, and we'd start a brand new buy signal. But the original low was 1171. It took me a long time to realize an original low is an original low. And other things can happen, but if that low is not taken out, it remains the low of consequence. So let's keep that in mind. So what I did is I called the very next peak on the 7th of August, peak B. It pulls back again quite sharply, doesn't take out the left side low. It goes to 1218, starts to move up to peak C at 16.28, pulls back again very sharp. Remember, in the Chapman wave, the objective is to get you to D, but sometimes it can be a really bumpy ride, and then it gets to D. That's not our problem. That's just the way the VIX works. It becomes a problem if you get stopped down. Then it pulls back, and it starts a break today above that peak C of 1628. So just for safety's sake, I'm calling this leg D at this particular moment. Can you hold on? Because I wanted to show some other things relating to it. Are you able to hold?
I am. I guess I'm a little confused then, too, on how you just, yeah.
Okay, I've got the chart, and I'll show the chart. And for subscribers, I'll show it tomorrow again. I'll be back with Ben straight off this Dow's done.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we are back, and I'm just trying to finish this 120-minute chart with projections, etc. Let me just do that. There we go. So that's saying that if the selling remains now, wait, let me just go back. So we've got Ben Online. We're looking at the VIX. So let me just do this again on a strict Chapman wave basis that of looking for the lowest lows. Normally, what we would have got is a restart right there on the 5th of August, and this would be peak A, peak B, where I've got a C on the 12th, and we'd be in leg C, A and B, where I've got a C, and we'd be in leg C now. Is that what you've got?
Correct.
Yes, okay. So there's nothing wrong with that, but what I wanted to include is that to have a heads up, just to say, hey, wait a minute, is there another wave count that is as legitimate as the original one in the original formula? And that says, and there was a question here on the 5th of August. Now, I'm going to check this out. On the 5th of August, that low was, so the question going in the den says there was a low of
1088.
1088?
Yep.
I have 1176.
Yeah, my chart shows on August 5th, 10.88 for a low.
Yeah. So if that's the case, then there's no question this has to be leg C. Now, sometimes, it doesn't happen often, we get a difference in price points I happen to have stuck with TradeStation for years, decades actually, and I've found that when things get resolved, they very often get resolved to the favor of TradeStation. So all I'm going to say is that at this point, I'm going to go with the 11.71 low. And let me just double check what I've written in my, yeah, I don't have that. 10.5, I have 11.76.
Oh, that's really bizarre.
1088, you're right. 1088. So, okay. All right. So, well, that resolves that. But it isn't in my price. I've got it on my 120-minute chart. I think I recall now something weird happening. I think it was changed after the bell. I had differences. Now it comes back to me. I was looking and I thought 1088, and I did make the change in the 120-minute chart. All right. So, let's do this. Let's just put this in and say that we're going to go with the standard notation, and we're going to go with a C right now. If that is a C, that suggests, and I'm going to I'll fix it up like this. I'll do that because if there's a question, I'm going to go in favor of what could be rather than what I've got written, because I've got 1171. I do not have that as a low. I only have a low of 1176. That's a big difference. That's almost a point. Gosh.
Well, most importantly, it completely changes. There's a big difference between a C and a D, right? In the Chapman.
Well, there absolutely is. Now, what I wanted to just mention, that's the reason why I went through this whole thing, is that the stochastic and the MACD in the VIX index for the very first time has had a very steady rise. Now, I think that 10.88 will change it slightly because they'll have to reconfigure it, or maybe it's already configured. They've just got the wrong price. I don't know what it is. I'm going to stick with it as, meantime, there's a cup formation. That's all I needed to know, that there's a cup formation, and the cup formation is suggesting quite strongly that in this environment right now, we can expect that the lows on the volatility index might be much shorter term as we start to make higher highs and higher lows. My objective here is to get to Dow 17,034, I believe it is. Let me just double check. That was the low way back here on the 2nd. Yep, 17,034, the low of the 2nd of February. And that's my target. And I'm just squeezing the chart to show that you've made a beautiful arch formation. There's a second left side, right side price time match that takes you actually all the way into the end of August, beginning of September. It's like 10 days. I don't know if there's got 10 days left in this to get to just 100 points lower, less than 100 points lower. I think that's going to be happening quite soon. So let me just go back. So now you've got the VXX. It's very important for you to know this because in your VXX, if we have a difference, so wait a minute. What do you have the low? Look, I have the low on the 5th, that's 1548, and then 1551. So this is not yet leg C even in the VXX because it has to go to 17.42. And your big question here is, should I be thinking of covering here? Because if we've got that
it's
D,
it's gonna greatly impact where I put my stop. Is really where I'm going with this thing.
Okay, so then let's do it based on two things. In the VXX, which is the iPath S&P 500 VIX short-term trading vehicle, ETN, the target that I have is 1788 based on the 200-period exponential moving average in the 120-minute chart. There's also the cup formation that says if we take out the high of 1741 that was made at 11:30 on the 12th, there's a real good chance we're going to make that cup formation to test the high of 18.12 that was made on the 27th, and that takes you right to the 1788. 1788. That takes you past the 1788 200-period moving average. So I'm going to make two suggestions. One is that you can think of having a trading stop on part of your position. It's at 1717 right now. If it takes out the low of the day, 1677, that's a big percentage, but it's still nicely up from where you got in, right?
Oh, yeah. I actually bought the UVXY, so I'm doing great.
Oh, you got the UVXY. Okay, so the UVXY is the ProShares Ultra VIX short term. Okay, this makes it even easier for me because it's 300%. It's up to 10.61%, at this particular time. The vehicle we have is also up 10% today. What I'm going to suggest is have a trading stop, because I think they've used up most of the upside today with that big spike, and they had the spike yesterday and then the failure. I think the tide is now being demonstrated, that the tide is really strong to the downside, that more and more fund managers are going to have no choice but to start exiting their positions on any rally, and they're starting to implement, and the VIX is telling us that they're only now beginning to get nervous and to buy insurance. So I don't want you getting out too early, because I do believe that we're going to be breaking 17,000. But these instruments are really finicky. I don't have to tell you that.
Oh, yeah.
So definitely take something off to reward yourself, even if it means you have less, if it spirals to the upside. Believe me, if it spirals...
Well, I took a third. My thought was I already took a third. And then I think what I was going to do is take another third at D, peak D, or leg D, and then I was going to let the rest run for a longer term, thinking that the market's going to go down.
Okay, I like your thinking. There's only one problem, that the way that these diminish, the premium shrinks so quickly, is I like the idea of taking 2/3 off and leaving the 1/3. That 1/3 position, even the 1/3 position, has to be handled. My desire would be for you to have a core position, and when the Dow's down at 16,300 or something, maybe in a month's time, you're looking at this and you're saying, wow, that's nice. I'm so pleased I kept it. It's very hard to do. I think many people know that it's very hard to do. You've seen a 10-to-1 inverted split already. So they were at 7. I remember back in October, the VIX was at the trading vehicle we had was at 7. Then it had a 10-for-1 split, and as a 10-for-1 split, it hasn't hit 7 yet. So it's down a tenth. So that's all I'm just saying. Treat it as a trading vehicle. It's very difficult, I know, to keep coming back in, but if you have very nice profits, you will find that you get a lot more comfort at coming back in. So try to keep the third. I agree with you taking off another third. And I would even say to you, if it breaks above 30.50, your UVXY, to start to confirm this leg up. Today's 29.99. It hasn't got very far to go. If it does that, have a trading stop. Rather than wait for the pullback, buy. You know, David White often says, sell when you can, not when you have to. So rather sell when the premium's in your favor. And that makes sense to me. I hope that helps you. And for my subscribers tomorrow, I will try to do this notation to explain what I did. To do it orally is very difficult, but I'll try to do that tomorrow for subscribers to show what I'm thinking of. And this is I'm calling it leg C for now, even though I don't have it officially as a lower low at 10.88. But thank you, Gator in the Den, for telling me about that. So, hey, nice trade. Good luck with the rest of the trade.
Yeah, Basil, and again, fantastic calls over the last couple months here.
Thank you very much. I appreciate that, Ben.
Have a great day. Thanks.
Thank you. Let's go to Scott in Safety Harbor. Scott, how are you?
Great. I guess you can see now I wanted to sell out the other day the Apple at the 116.50.
You see, we were both in the same wavelength. What I was saying to you is that the pattern suggests...
You know what's funny is I sold that out when I was on the phone with you, and I just bought it back now as I'm on the phone with you. Like 1 minute ago, I got 1,000 at 112.07.
So now that the 1,000 that you've got at one, I'm going to make two suggestions. One is that the arch, if you can see my charts here, I've got Apple folks trading at 112.01, down 3. Apple is beginning that next acceleration to the downside, having failed with the 9-period moving average. I'm just looking at a slightly bigger picture, but let me just
explain. Well, I am too a little bit. I've got 1,000 more left in the war chest I can afford, so I'm going to be spreading out that next 1,000 if it does come down. That's my insurance.
Okay. Oh, okay. Then we're in. Okay, that's fine. Let me just explain to you what I'm looking at on the 10-minute Apple chart. At 112.06, the flat stochastic and the flat MACD suggests that the 112.40 to 112.60 area is going to be somewhat of a barrier, because there could be another arch formation. And then you will get, I don't know where your next entry point is, but somewhere around 111.50. It better hold there. because if it doesn't, it's going to also drag the QQQ down. And then all of a sudden, what's going to happen is you're going to find that the fund managers will be selling the Apple because that's such a big part of the QQQs.
Well,
Or they sell the Qs.
that is true, but I think before it gets to the 111 area or the high 110s, I think those same fund managers who are really still looking for some value, most of
For
them
bargains,
the real
right.
call. Yeah, the bargain hunters are going to be in there, and the individuals, because there's so many Apple lovers. I personally can't stand Apple. I think they have lots of flops, like the Beats headphones and that weird stuff.
Well, you know, I used to love Golden Delicious, but I've been off apples for a long time. It's just, it depends on your taste. So what I'm saying to you, Scott, this is the one that I think you've got to be a little bit more careful of. And I'm going to also suggest that if Apple does take out the low of 109.63, I would not be playing Apple other than your quick bounces, and that's the only way I would do it, because this would start the acceleration down on the weekly chart if Friday closes lousy.
I look at Apple as a $100 stock, and there's some people that look at it as a $150 stock or a $200 stock. But in my mind,
with you.
whenever I trade
actually, 99 to 95 is my target for the big support.
That's what I look at as. So I'll play with it, from way up to 120. But I'm really pushing it at that because I really look at it as that. I mean, people got to remember at $100, it's like, if they hadn't changed it, that would mean about $800 a share.
Oh,
right?
it's still very high up there, yes. But once again, you and I talking, for folks listening, remember, Scott has his own plan, and he does very well with these trades that he can sometimes hold a little longer than he normally would, and sometimes a little shorter. He has goals, and that's what you got to have here. So good luck with this one, but it needs to do it within the next, what's the time? It's 10 minutes to 12. You want by 12:20 to see Apple stabilizing, moving back into the 112.25-ish area, and that'll say, okay, now it can have a bit of a bounce.
But I think you're correct. It's between your charting and my just public perception, I think Apple is just kind of like not the apple of everybody's eye now, because for just no other reason, there's so many other things happening that it's just not all that important to people.
They've used up almost all their bullets. I think that now they have a time. They have to reconfigure. I think they'll be back, but not for a while.
And
hey, thanks so much for the call, Scott.
Silly to think that there won't be another phone much better than Apple. Of course there will be, of course.
At some point, yep, at some point.
Absolutely.
Thanks, Scott. Appreciate your calls always.
Thank you.
Thank you very much. Let's go to Travis in St. Louis. Hey, Travis, how are you?
Doing great. How are you?
I'm well, thank you.
Hey, still holding TKAI, of course. Just has been about a month since I talked to you. Just thought we'd get a quick update on it. It seems to be kind of established in a trading range between 11 and 14. So I like kind of how it's holding in from the rally last week with the market kind of back on its lows.
Let me just update folks listening. Tokai Pharma Inc. Prostate Phase 3. This is a biotech stock. It is trading at 12.62, down 39 cents. And we've got, let's see, Travis has had other stocks that he's had fantastic moves on. This one, he's just begun his probe into trying to find a bottom here. And my suggestion has been that just not to be fully invested yet in this stock. This is what I at least look for. That big spike to peak F, rogue wave spike at 1471 on the 14th. We'll discuss it because I want to talk about the lower lows and lower highs and how it is holding so far. So, Travis, are you able to hold on?
Yeah, I'll hold on.
Great. We'll be back with Travis. Dow's down 208. Be right back. Basil Chapman, Tiger Technicians Hour.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Folks, don't forget, stay tuned. We got just fabulous shows coming up. We got Daryl, you just all the way through, with ending with Andy Hecht. You got Daryl, and you got Steve Rhodes. You've got Dave White, Tom O'Brien, Andy Hecht. This is a great day to be live and looking at charts. Let's go back to Travis. Travis, I just finished the notation of the chart, which says that the little single leg A up that we ran to almost the 200 period moving average in TKAI, Tokai Pharmaceutical or Pharma Inc., going to the high of 1353 on the 18th of August and slipping under the 9 period moving average. I've got a retest of the 1035 low if by September the 8th, a left side, right side price time match, if two things happen. One is, if this candle of the 14th that had a low of 1171 and a high of 1267, if it gets even halfway in, if it gets to like 12, if you break 12, let's make it easy. You close under 12, well, not you, Tokai closes under 12, and my suspicion is you're going to have an arch formation. It's going to do some retesting. This is what I believe I'm looking at here. The chart has held extremely well, except I believe this is not a chart for technicians. I believe that the majority of folks that, I don't know how I'm going to prove it, but the majority of folks that are in the stock are in it for fundamental reasons. And as long as those fundamental reasons are there, I suspect that you will have some kind of support, and the support should be quite strong between 12 and 11, which means that it'll bounce around, and at some point, if it hasn't taken out 13, it's at 1262. If it hasn't closed above 1330 in the next, by Wednesday or Thursday of next week, instead it's making lower lows, then that would be my target, still within your range. And that's the way I'm looking at it right now, that there's something going on that's holding it up, and that's obviously the news about the company, within the company. But I'd also be a little cautious about not overbuying. I think you're going to have plenty of time, even though the news comes out very suddenly, but I think you'll have time to maybe do some adding under 12. And that's the way I would look at it right now.
That was my big question was, with the market trying to break out of this range to the downside, it appears it's trying to anyway. We've been fooled several times this year. But, how this thing kind of holds in through into the fall, because the news isn't really going to come out till next year on this thing. I mean, we're not going to see any data until at least probably early next year and really late next year.
That makes me say to you, hold off getting. I know you still have your full position. I think you're like no.
On now with an average probably. It looks like my average is around 1240. So 1240. And I bought all the way through the 11s, 12s.
Right.
I've got shares everywhere, but I got an average around 1240 on this thing.
Okay.
So I could definitely lighten up a little bit here and try to put them back at 11 or 1150.
You don't have to rush to lighten up. After all, it's there's something else. It's a different kind of a stock to the market, but the market does influence it. So think about over the weekend whether or not you want to lighten up a little bit, and then where you would be prepared to put that money back. That's what I'd be doing.
Right. Okay.
Thank you so much for calling, and congratulations. You really played these beautifully, Travis. Thanks. Have a great weekend.
All right. Thank you. You as well. Bye.
Okay, folks, let's just do this real quickly. I'll do the Dow as we wrap up because we're going to go to Darryl right after this. See, the Dow's made a new unrecovery low, a new weekly, is it a day? Yep, a new daily low. And in this particular instance, my target is still 17,034. We're going to get these little counter trend bounces, etc. But as I'm looking at it at this particular point, my thinking is that this H pattern could maybe turn into an M pattern as we stall if we get close to 17,000. A close below 17,000, no, 3 closes out of 5 sessions would say to me that this is now making 16,000 its home, the Dow that is, and that the 16,900 to 17,200 is going to be severe resistance. Just keep it real simple, and as we say, the bias right now is lower highs and lower lows. That's the theme for now. These counter trend rallies will probably fail, and hey, I'll be back tomorrow. Have a wonderful day. Thank you so much for being here. Check out my opening call. You might be very interested and find a lot of information there. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.